Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell for Tuesday, November 1st. Hope you guys had a good Halloween. Don't forget to run that player at 1.5x. Looks like we got a risk-on morning this morning. Oil up almost 2%. Bitcoin 1.5%. Equities 1% across the board. And copper up 3%. Folks are attributing the pop to a committee on COVID reopening being put together in China. Remember, that was something that we talked about a week and a half, 2 weeks ago, as Premier Xi was closing in on his third term, that he would want to shed personal responsibility for COVID off to somebody else. Politicians love committees, so if he can, move that off his plate and move it into a committee to take responsibility for it, of course, when they reopen and if something bad happens, then of course all the committee members go off to the fingernail factory spa and resort, and she doesn't have to take responsibility for it. The only problem with the committee is the reopening is set for March. But I think if that committee gets rolling and there's any releases, they're gonna, the market will front run that as a positive catalyst for global growth and demand. I think oil and all, the commodity complex would have an upward pressure to it if China is showing any, tangible signs of backing off on the COVID lockdown screws. So I think that's important. Other places on the macro front today, we've got PMI, ISM manufacturing numbers, construction spending, JOLTS employment survey. And of course, the big one is the FOMC rate announcement tomorrow at 2 o'clock, and then the presser at 2:30. We're up this morning. Just remember that the typical setup is to wander and chop ahead of the Fed with a slight upward bias. So, keep that in mind. Anything can happen. We saw yesterday, everything was looking great. And then, afternoon, word comes out that Biden wants to do a windfall profits tax on energy. And the market took that opportunity to do, a big dump right when things were looking good. So, I think he's going to have limited ability to do that. Seemed like when there's a time when you need more energy, whenever you tax something and regulate it more, the price goes up. So I don't see how that's really going to help matters, but they'll do what they want to do, as always. Earnings front: SoFi, Uber, Pfizer, BP, Marathon Oil, Lilly, Phillips Petroleum, and Toyota before the bell. After the bell, we got AMD, Devon Energy, Airbnb, Energy Transfer, One Oak. Those are in the energy pipeline space. Chesapeake Energy, and then McKesson in the drug retailing and delivery space. So let's go through our chart deck. Not a ton to really discuss. I think it's more or less a reset from yesterday. The dollar did pop above support here, above 111. I think you continue to watch that. This, from a technical standpoint, now looks like a fake breakdown with that recovery. I think that, the dollar is going to be highly hitch to what the FOMC says tomorrow. If it's dovish, it'll fall. If it's hawkish, it'll most likely rise. TLT took a dip and then came back up. I'm looking for this 98, reactions in and around this 98 pivot. VIX was up a little bit yesterday. We've been talking about focusing back in on 25 as support and 29 as resistance. Now, I think now, since we've gotten the breakdown, what we're looking for is just now daily trend. So keep the VIX on your, if you're actively trading, of course, on your matrix, and just watch that trend ahead of the Fed and intraday. Bitcoin just maintaining the status quo. We got the breakout from the downtrend line and got a nice lift. Now the objective is to get up into this 21,500 area, where you can see there's a big value area formed between there and 19,000. And just coincidentally, the 50 is right here in between the trading range at 20,000. So I think you can use that as a stop if you're long, if you bought that breakout. So WTI is up this morning. I think that 88 is still here, the clear pivot. I still like energy. We've broken out of this pronounced downtrend. We have had a lot of variability. It hasn't been straight up, but nothing to the downside has been violated. So as long as price stays in this relatively wide channel and above the low side of the channel, I think things are remain bullish, even though there honestly hasn't been any dramatic activity. If we look overhead, we've got the 200 here, we got the midpoint, and then we got a big level of resistance in and around 95 at this 38% retracement level. You can see we came up, tagged it once, got rejected swiftly down to the bottom, and now we're working our way back up. If you weren't really focused on energy and you are of the mindset, I'll wait for something dramatic, I think above 95 would have the likelihood to get some upside acceleration. But, as it stands now, I think 88 is a nice pivot. Moving on to the oscillators, they ticked down a little bit yesterday, but nothing to really change the thinking. They're still very much overbought and stretched to the upside. Same thing with NAMO on the NASDAQ. We're here at 56, 58, 60 at the top end of the range, stretched to the upside. SPY down 7/10 yesterday, but honestly, right here in the thick of it here at the convergence, if you will, of the 50% fib retracement of the down move and lateral support and resistance between 385 and 390. I think a break above 390 would really open the door to the next level up towards 398, 400. We can see that on the 60-minute chart. You can see yesterday there was a drop down and then just really 8 hours of nothingness yesterday. Whenever you've got on the hourly chart, a red bar then a green bar, then a red bar, then a green bar. It's just a long slog, and one of those frustration days, which often, follow these dynamic days where you can literally do no wrong. Fun day of trading, right? When you really don't have to do anything, you just have to get in and then watch the fireworks. Here is a recipe, unless you get really disciplined and recognize the day that is panning out, a day for over trading and getting in and then getting stopped out of a lot of stuff. You can see here the clear lines. 388 to 390 is your resistance, but then above that, then you can see some horsepower to the upside to get up into this 398 400 range. Same kind of thinking on the Qs. It's really got a clear 280 for 285, where you got the 50 coming in, and you've got a series of rejections right along that 285 line to get going to the upside. You see, we've got, if we can get a breakout at 285, then you've got a high volume bar here, and you've got a long-standing line of resistance right here at 295. So, relatively speaking, a lot more work to do on the Qs than on SPY or IWM. Here's the blow up on the Qs 1 hour chart. You can see there's our 279 280 line. Got to recapture the uptrend channel. There's our 285, and then 290 up here in the upper half of this channel, and then going up to 295. So, I mean, more or less, we've got $5 increments for things to happen. 280 for 285, 285 for 290, and 290 for 295. And I think just talking in round figures, you can use those as pivots or upside targets. And on the downside, it's pretty much the same thing. Below 280, 275 is first support, and then 270 is second support. So really just more or less a coincidence how this sets up in $5 increments, but that's the way it goes. Good day for IWM yesterday. Not that it did anything, but from a relative standpoint, IWM is outperforming. The other indexes were red. IWM held serve here at 182.50. We've been talking about our little measured move targets working all the way up. Yesterday, or in days prior, we had moved out of this big $12 range, moving up more or less in $3 increments, 176 to 179, 179 to 182, 182. Now our target is the bottom of the gap at 185, and then our measured move target is 188 with a gap fill to 189. And the nice thing about the way that this is set up is, now support is all within the uptrend channel. You can see we could pull back in here to 182. That would be an objective buy against this support and the bottom of the channel. And then you get a breakout above. You can see yesterday 184 proved to be a sticking point here, and that wasn't a coincidence. You can line that back up with the large volume over price bars here with memory, price memory, knowing exactly where those locations are. This morning, if you get a breakout above 184, that can be your pivot, knowing that, number one, you've got gap resistance here at 185, and also knowing that your volume over price resistance bars really fall away. So this could be, if things get going and they don't want to drift it ahead of the Fed and they want to kind of juice it, this is where things could really move fast. That's a nice wide $4 gap there with hardly any volume over price resistance, and clearing the way for a run to the top of the channel. And if you are lucky enough or good enough to be in that trade when it happens, and you get a flash move up to 189, you got to do one of two things. And you know what I'm going to say. You got to go to the bank. You can't just sit there after a $4 or $5 move congratulating yourself. Believe me, I've been there. I've done that. And then they take it away just as fast as they did it, like on a fast technical move, just to fill the gap and then reverse it. It's always a good idea if you're, after you get, a significant technical event like that, you got to go to the bank. And then a more nuanced question is, do you want to stay long, or do you just want to go to the bank and then say to yourself, well, if price can prove it, if it can pop 189 or pop 190, I'll get long again, or I'm going to reverse on a dime there. I've surveyed the landscape. SPY and QQQ don't look so hot, or they're at resistance as well. I'm going to try a shot on the short side. I'll get long against 189 with a stop at 190 and see if you don't get the pullback move. Because remember, the whole idea behind a channel or any trading range is you go from the bottom to the top and you recycle that characteristic until price proves it can't do it. So bottom, top, bottom, top, bottom, walked along the bottom, top, top, due for a trip back to the bottom, right? Now, like I said, it could break out and you could have a whole new pivot point up around 190. But the objective trade is to go back the other way, because you're at a double layer of resistance. The first layer of resistance is the top of the channel. The second layer of resistance is the top of the gap. So you've got, two layers there that price would need to overcome. And I think at the very least, you get a reaction. That reaction may not carry you all the way to the bottom of the channel, but even if it was only halfway, that might be $3 or $4. Certainly enough for a technical trade. Meta, bad day at the office. Why? Broke below the bracket. I know some of the guys got short here at the bottom of the bracket. All I would say is keep this 7-year monthly support in focus at $90. Now, does that mean that you can't get an undercut, or this whole thing fail and it go down to $50? Sure, anything can happen. All I'm saying is this is a huge level, and if you got down to that level and you were short from 96, you might want to take your profits, go to the bank, and then do a big reset around 90 to see if that either holds or breaks, because this is going to be a massive pivot level. Remember, the longer the time frame, the more important the line, the more important resistance and support are. So that makes, once you get out to the monthly support, doesn't get much more important than that. Apple struggled with 154 all day yesterday. You see there's a gap to fill here from yesterday. I would use really the bottom of the gap as a pivot point. Hope for a fill and then a break above the midpoint for a run to the top of the gap. You can also certainly keep in focus the bottom of the channel here at definitely at 150 and a half down here. If you were to break that, then chances are there are problems afoot. But as long as you can hold the bottom of the channel and or this level here at 152 and a half, I think you've got objective longs if you get some weakness here at any point. But I think this morning we're going to be looking at pressing towards this 154 and trying to fill that gap here this morning. Tesla was a non-event. Again, if you're tactical trading, there were a couple of opportunities. We did get a bar that reached down to 222 in early trading, and then it worked its way up towards 230. So from a tactical standpoint, or active trading standpoint, this doesn't look like much, but if you're good at picking off the lows at 222, where you've got a track record of that holding, that's the essence of range trading, right? Buying lows and selling resistance. And so now what I've just basically done is boxed in that area here up towards 228 to 222. And then you can use this 228 area as a pivot today, whether it's going to break out and give a push towards 235, 240, or it's going to retrace and stay within its box. Microsoft dropped down below this 235. We've beat this thing to death over the last, however many weeks. 235 is your clear pivot. You get a break above 235. I think you got to take that long and then see if you can get a move into this big gap above. But while below, you're still vulnerable for a pullback into 228. Amazon didn't do much yesterday. We talked about on the daily chart that this little band between 102 and 102.50 is a prior low on the daily chart. I think you can use that as an important pivot point here on your 60-minute chart. Plus, that there's a big gap above. So if you can get a long in here around 102, 102.50, give yourself a little room. If things get positive, then you've got quite a bit of running room to the upside for a long trade to work out to fill this gap. Google, we talked about yesterday, a breakdown and a back test, and then yesterday it had a little gap down and spent the whole day here in a very narrow range. I've got a level here at 95 you could potentially use as a pivot today if you're interested for a move up to 96 and a half, which was the prior high and this big line of resistance. if you're of the mindset of, I really don't want to try to knock myself out for $1.50. I'd rather wait to see what happens here at 96.50 before I consider a long. That's perfectly fine. That is your main pivot, 96.5. A break above opens the door for a potential fill of this big gap up to 105. And as long as it stays below 96.5, these prior lows, the door would still be open for these prior lows down at 92. So I think those are the key levels in my mind. Yesterday, Netflix had nothing, pulled back to the 200. I think if you're interested in trading this, you can be long against 290. I think your upside target from 290 is 300, but it's got to hold that line. It's got to hold 290, or else it's susceptible from rolling down into this 280 area at the bottom of the gap and the top of the bracket. SMH, again, nothing yesterday really. We had a little breakout above this 190 pivot and just spent a lot of time just hovering right in and around it. I think today 190 is your pivot. Above, you're looking for 195. Below, you're looking for 185. I mean, it's pretty clear given the support and resistance areas that have already been carved out with the prior price action. You can see here we've re-entered the range. We're at the midpoint. The top end of the range is 195. Then you got a $5 gap above. So those are definitely the levels. I couldn't see any changes at all on ARC, hovering right here at the pivot at 1675. Genomics toggling right at the 50, right where you'd expect trouble, or not trouble, expect resistance. You need to push through that 34.25 to get some horsepower to the upside. Then all this will act as your support, right? That's the reward for suffering through resistance, is that if you make it to the other side, then all of this prior resistance becomes support on any kind of pullback. You should have responsive buyers there. Flagship fund still has the bottom of the box and the 50 EMA looming overhead as resistance. Got to clear 40 to get some horsepower on ARC K. And then ARC W, same exact setup. You've got the 50 holding up the show at 49 on your daily chart. So good pop in futures. Let's see if they can hold it today. Remember, the big catalyst in front of us is the FOMC tomorrow at 2 o'clock, and then the presser at 2:30. So that'll have a big impact. Well, I can't say that. Maybe everything's already priced in of what people expect to have happen. So we'll have to, deal with, whatever volatility may come after tomorrow's print. But today, let's see if we can hold the gains and manage to not overtrade and, take some good high risk reward trades with objective levels and predefined stops, so we don't overtrade and we can do the best we can today without overtrading or getting chopped to pieces in a pre-market or a pre-Fed marketplace. So let's wrap it up there. Hope you guys have a great day of trading, and talk to you next time. Yeah, this has been Chris Buss with Traders Profit Compass. Have a good day.